Good afternoon. Uh-oh. Good afternoon. All right, that's good. Let me first thank my friend, and he used to be my assemblyman. Sometimes I forget and still call him assemblyman, although I'm sure that his family likes it better where he is now, because we know that in the state assembly, they didn't get paid much money. So I'm sorely hoping that you all are compensating him much more because the value that he brings to you, not just for the sake of compensation, but I can assure you of the value and of the talent of which he brings to you and the organization and the bank that he represents. He is fantastic, and I want to congratulate him on his appointment to Cross River Bank, and thank you, my friend. I paid you a little for that introduction, so I don't get on full disclosure. So, but y'all should give Phil Goldfeder a round of applause. And I'm delighted to be here. I'm getting my voice back. You know, some may know that over the past week, the Congressional Black Caucus has its annual Congressional Black Caucus Foundation, and we had a series of events beginning from last Wednesday that just ended late last night, and so I'm just getting my voice back. But it was a fabulous time that we had, some of which, because some of what I'm going to talk about is a little different. We're not going to just talk about the McHenry and the Meeks bill, which I know you know about, because it's significant and important to all of you, and I think important to the future of how we deal with financial services. I'd like to give a little brief conversation that somewhat, brings in what you do to my constituents, to the districts that I represent. I represent the 5th Congressional District, which is what Phil, when he was this member of the Assembly, was a part of, and it includes all of Far Rockaway and Jamaica, Queens, St. Albans, Hollis, Richmond Hill, South Ozone Park, so it's basically, it's communities that are largely comprised of middle-class homeowners, many of whom are African American or Hispanic, but a large portion of everybody. Most folks, so these are individuals who are not what, we have some pockets, but they're not poor. They're homeowners, but they still experience a range of financial challenges that we normally associate with individuals who are poor or in other communities. So that's why I think that it was important that I thought that I bring this, because I think it's kind of relevant to what you do. Because, over half of the individuals that are in the district, because it's 32% ownership rate for the rest of New York, but over half of those in my district own their own homes. Nevertheless, many of them have had, because of the financial crisis, the greatest recession since our Depression in 2009, in 2008, and 2009, many of them were given back in 2006 subprime loans. Subprime loans. They were given subprime loans even though they could have qualified for prime loans. And so when the crises hit, my district was devastated. In fact, there were more foreclosures during the financial crises in my district than any place else in the city of New York. My constituents also faced challenges in assessing affordable financial services despite their middle-class status, and many in the district are underbanked. We have 34% of bank account holders relying on alternative financial services, including check cashing services, non-bank money orders or money transfers, payday loans, pawn shops, rent-to-own agreements, and refund anticipation loans. So my district is somewhat emblematic of many areas around the United States of America where costlier financial products and services are oftentimes the only options that they have because other institutions began to close their doors. So how do I come to talk to and want to deal with fintech? I believe to meet the challenges that we have, the emergence of innovative fintech firms and their partnerships with banks offer new, less costly options. Working with fintech partners, banks will re-enter communities in which they left during the financial crises. In fact, when I think about the financial crises, over 5,000 branches, bank branches, shut their doors, turning communities into banking deserts. Fintech offers a creative opportunity to get banking back into communities. There was a recent study from the Philadelphia Fed which demonstrated that fintech bank partnership model can bring back well-regulated bank loans to the most underserved communities, and that these fintech bank partnerships should be supported by policymakers and not discouraged by legal uncertainty. And that's why I'm so passionate about the Made and Fix bill, which I introduced into Congress that you heard about earlier, I'm sure from the OCC commissioner. Moving forward as a senior member of the House Financial Services Committee, and I'm also the co-chair of the Congressional Black Caucus's Task Force on Economic Development, I look forward to further engaging the fintech industry and educating my colleagues on the potential benefits and risks associated with financial innovation. And as I continue to push federal policies that encourage reasonable and responsible financial innovation, it is important. In fact, I need the fintech industry and its supporters, you, to help me. I need you to help me. The fintech industry must create and have the opportunity to do something that some have not had the opportunity to do before, and that is to create a political environment that allows for a bipartisan support of the industry's policies and priorities. We are living in a divided world right now, politically and on the Hill. And I think this country, I know this country desperately needs to find issues that are beneficial to the American people in general, and finding reasonable and accessible financial products that look toward the future could be that opportunity if we do it right. I know I get upset at times when I come from New York and I see that Wall Street, for example, is the draws to Main Street their anger. It should not be. Wall Street should understand Main Street, and Main Street should understand Wall Street, because without one, the other could not exist. I can't tell you how important the financial services is to Main Street. You take it away, and Main Street is in big, big trouble. So here, I think, with fintech, we can create that model that can bring us together. Here's how we could do it in my estimation. First, you're basically the new kids on the block. So fintech leaders must make their case. You must make your case as banking enablers, that you're going to help make people's lives better, as opposed to disruptors. I can think, I use this story other places where I go, where I talk about my parents, the fact that they owned a house or bought a house. I grew up in public housing. My parents were poor, but it was a small community bank that gave them a chance to get a mortgage so they could buy a house. And they bought that house, and as a result of buying that house before the crisis, when it appreciated, they were able to utilize that money that they got in the house from the appreciated asset to help fund me through college, my sisters through college, and my father to create a small business. And so oftentimes where I go, I tell people, encourage folks, particularly in a community like mine, to own the house and rent the car, as opposed to renting the house and owning the car, because one is an appreciating asset and the other is a depreciating asset, and then having financial literacy in so that people can understand what we're really talking about in this advanced world. And if they have financial literacy, then when they're looking at the financial product, they don't make the mistakes that took place where people could give them the subprime loan and they don't understand the product of which they received. But you have an opportunity to try to make sure that the product that they receive is nothing like that. So you need to be an enabler as opposed to a disruptor. And for the foreseeable future, large firms, community banks, credit unions, and CDFIs will continue to serve as the primary provider of financial services in many communities, highlighting how a bank partnership model can help the incumbent financial institutions increase efficiencies, better serve customers, and expand access in underserved areas is the most appropriate approach to garner bipartisan support in Washington, D.C. Because one of the things that we have in common, whether you come from urban America or rural America, we have the same issues. We talk about smaller banks, community banks, how we do certain things, fintechs, how do you do the partnership to make sure that we're bringing services there. So lending clubs, partnerships with Opportunity Fund, a CDFI, is a great example of how fintech firms can arrange mutually beneficial partnerships with community-focused institutions and better reach underserved areas. Similar partnerships should be considered between fintech firms and community banks, especially with minority depository institutions. You might have seen in Chicago where the city is talking about doing certain things with minority depository institutions, because black-owned banks, for example, continue to play a critical role in closing financial gaps in the African American community and have been successful in doing so since the Reconstruction era. But unfortunately, black-owned banks have been ravaged by technological changes in the financial services industry. Still, these banks maintain strong community ties and support. So, in my view, a fintech firm's partnership with a minority-owned institution could provide these institutions the technical expertise they need to evolve with the industry while providing the fintech firm better access, because I think that's what you need. These are new markets, but it gives you better access to an underserved community who are starved for financial services. Second, bipartisanship, but I think you can get both sides in. The fintech industry must embrace a culture of diversity and inclusion beyond its product offerings. Now, we have this conversation that's been going back and forth for a while. While many in the fintech industry have demonstrated their commitment to inclusion by serving underserved populations in lending, I believe the industry must also demonstrate a commitment to inclusion in their boardrooms, in their senior management, throughout their workforce, and in their contracting with consultants and government professionals. You know, women need to be on boards so that you could hear that perspective from someone who will keep people conscious of what's going on. The same should be of those from the minority community that we need to get into when you want access. By having somebody on the boards or in senior management, it makes a difference. And when we've looked at those that have done that, we see it makes good business sense. You know, just considering the advancements in financial technology that we see in Singapore and Kenya, where there's much less wealth in these countries, we've witnessed an explosion in fintech innovation, demonstrates that San Francisco does not have the monopoly on innovative ideas. They do not. We want to make sure that we do certain things, because I believe there's a wealth of human capital that can be tapped into in communities of color and women throughout the United States of America, and that many of these communities are where fintech firms need to focus, because I think there's great opportunities to earn money. Furthermore, there are legitimate risks associated with groupthink that fintech firms should mitigate through diversity. Recently, we've heard allegations about a persuasive sexual harassment in Silicon Valley at both financial firms and non-financial technology startups alike. And a number of these startups have made my point because they were all male boards or inadequate minority representation, which may have contributed to this insensitivity. Such controversies could make the political environment toxic here in Washington and could hamper federal efforts to support financial innovation. I'm trying to make sure that we clear and pave the way so we don't have that by thinking before. This is a selling point that I think that you can have with members of Congress. So I shared these concerns with many banks and regulators as well. For example, I recently sent a letter to the Federal Reserve in response to the proposed guidance or the supervisory expectation of boards of directors. In its guidance, the Fed highlighted why it is important for banks to have diverse boards. And my letter recommended that the Fed specifically highlight the importance of considering board nominees that are diverse with respect to their race, gender, and ethnicity. And I made this recommendation after considering numerous studies which show that corporations with diverse boards, as I've indicated, outperform their peers. I wholeheartedly believe that diversity, especially diversity at the senior-most levels of the firms, breeds that kind of innovation which mitigates risk associated with confirmation bias. And innovation can be stifled by picking board members and senior management from what I call the good old boys club. Lastly, let me say the other thing that I think that is important, especially in relating to Main Street. The fintech industry must maintain, in my estimation, a strong relationship with and figure out how you can work continuously with the Consumer Financial Protection Bureau and advocate to preserve that agency. In exchange for a no-action letter from the CFPB, Upstart, for example, has agreed to provide the Bureau compliance data for research purposes. This data will help the CFPB better understand the benefits and potential risk of innovation and big data. Upstart's engagement with CFPB should serve as a model, I believe, for industry regulator communications, whereby firms are provided the legal certainty they need to innovate in exchange for collaboration on consumer research and protection. Fintech firms should also help preserve the independence and the mission of the CFPB. They should learn from the blowback experienced by Equifax after they compelled consumers only looking to protect their data to accept arbitration agreements in return of their ID theft services. This approach was brazen, in my estimation, and demonstrates exactly why the CFPB's arbitration rule must remain intact. Helping the CFPB fulfill its consumer protection mission not only helps firms build relationships with regulators, it also helps firms avoid the reputational risks associated with actively lobbying against or trying to avoid consumer protections. I find that when you have both, that levels the playing field, and people do not feel that you're trying to take advantage of them, and thereby you become more welcomed in all communities and in all fields of the United States Congress. So I think that by making sure we protect the CFPB, and then we need to do something with the I think fintech, if you want to be creative, you know, and you will help us modernize and preserve the spirit of the Community Reinvestment Act. And I was very much encouraged that a number of fintech firms welcomed the OCC's proposal to create a CRA-like financial inclusion requirements for firms that apply for OCC charters. Let me conclude by saying this. I think we live in an exciting time. Innovation, moving, you know. I've seen the fintech industry. The excitement that's found around financial innovation is evident in New York, where fintech firms received more venture capital funding in 2016 than fintech firms received in Silicon Valley. I'm excited by the fact that Cornell University recently cut the ribbon on a $2 billion tech campus that will help New York City become the heart of tech innovation, complementing our role as the financial capital of the world. But most importantly, I'm excited that we can close the financial gaps for low and moderate income individuals in the areas of small dollar lending, mortgage lending, and home ownership, wealth management and insurance, small business access to capital. Because this is the American dream that most folks have. It's the same dream that my parents had, to see better for me than they had for themselves. It's the same dream that I think that when we talk about in these last political elections, most Americans, no matter who they are, where they came from, they really wanted the same thing. We've got these political differences going on, but if you just listen quietly to what the average, everyday Americans say they want to earn more money, the opportunity, and they want to be able the ability for their children to have better lives than they. They want access to capital so that they can have their own create their businesses. They want to build and own their own home so that they can have part of the American dream. That's what they want. They want that American dream, that dream that says that tomorrow is going to be better than today or yesterday. That's what they're striving for. And as we go through the shift in our economy, which is what causes that pain, I often say individually, we have a shifting in economy, when we shifted from an agricultural economy to a manufacturing economy, people who were in agriculture at the time, they felt that pain and they thought it would never change, or shouldn't at the time. But we became a more and a greater nation and a more productive nation by going into manufacturing. Today, our economy is a service economy, and it's a global economy. And as we shift into that economy, making sure that we can include as many people in it so they don't feel left out of it, makes it better for all of us. And I'm excited about the role that fintech companies can play in it. I'm going to be with you. I'm going to fight for that innovation because I think innovation is what's going to make a difference for tomorrow and make us stronger and better as a nation. I'm going to be with you. You will be with me. And together, we'll make sure that we keep moving as we continue to strive to make this a more perfect union. Together, we'll continue to have the greatest country that this planet has ever seen. It's called the United States of America. Thank you and God bless. So Phil, I don't know how you do it. I'll take some questions if you have them, and you know, I'm willing to do that.
I heard you ask people here to support the CFPB, and I wonder if the supporters also have an obligation to push back on the CFPB sometimes. For example, in the CFPB v. Nationwide case, they had asked for $79 million in damages, and the court awarded $7 million. And many observers think that sometimes the CFPB goes too far. As a supporter of the CFPB, what are you doing to address that concern?
Well, look, I never say be submissive to the CFPB. We have a reason where I think that we sit down and we talk. We don't say get rid of. We figure out those disputes, and we try to make it better. And so we have come, you know, before my committee, there's something that the CFPB has done that I didn't like. And what I do is go back to the CFPB and say, we've got to change this. You know, there's nothing that's perfect. I don't know any system, except a bill I write, that's perfect. So I have no problem with individuals saying, you're wrong, CFPB, and we want to push back on that, or this is too much money, this is fair, et cetera, and we go have that back and forth. I mean, it's no different than you have when people go to a judge or some other things. You know, you try to work that out, and I think that's going to happen. So I'm not saying be submissive. There's, you know, I understand the needs of business also. So I tell everyone I think that we are the greatest country because the fact that we are a capitalist society. And folks need to make money, especially when you talk about startups and small banks and community banks. They can't do this if they can't make money. They go out of business, and then I can't help the people that I want to help. So I think there needs to be, and there should be, that give and take. But for the argument that you get rid of it, and we should not have it, when we didn't have it, you know, this is part of the creation of the CFPB was created because of a problem that we had before 2008, where there was nobody there to give the consumer some protection and or some advice. So I'm not, you know, at all saying be submissive to them, but I'm saying that we can work a thing out.
Congressman Meeks, thank you for that great...
And that's an innovative mic. I like that.
Thank you. Thank you for that great speech and for the reference to the Fed study, which I don't think has gotten the same attention that it deserves, and I very much appreciate your reference to it, demonstrating how fintech firms are expanding into neighborhoods where banks have closed branches. How can we improve that message so that not only yourself but others understand the impact that fintech can have, particularly in neighborhoods where banks have pulled back?
Well, I think number one, of course, being a politician myself, is engaging local. All politics are local and they start on the ground. So as you're doing business and want to do business in certain communities, educating some, whether they first maybe some community-based organizations, letting them know you're there and what you're there for. And then secondly, you bring in or have them bring in some of the local elected officials so they can show what good, and that word starts to spread. I mean, say, for example, in a district like mine, what I ordinarily would do, just as an example, there's a group called the Greater Jamaica Development Corporation. And I would have you meet with them and talk about the fact that you want to get into the community or what you're doing and the opportunities therein. Because they have a whole network of other individuals that they would then relate it to. And then it comes out that we've got this reputable fintech firm that's doing business that can help us, and that starts to change the flavor on Main Street. I also, and that's the reason why I'm talking about trying to do certain things on a bipartisan matter and using language, because whether it's urban America or rural America, when I talk to some of my Republican colleagues, to be quite honest, we have found, when we're not arguing in public or anything else, there's much that we have in common in our different communities. And so I think reaching out in that regards will help tremendously, because folks will really, what they're fighting for is for the benefit of their constituency. Yes, sir.
Yes, sir. Steve Ellison with Digital Federal Credit Union. Today we've heard a couple of some optimistic good news. I mean, for instance, the OCC has opened the Office of Innovation to help push for more fintech collaboration so the regulators, at least with the OCC, can help with this move. What can we do to help other regulators across the system have a similar attitude so that we get a wave of this across the whole industry versus one regulator at a time?
Well, good question. Here I think that as you're talking to me, just as a starting point, and since you're here in Washington, D.C., going by every member's office, Democrat or Republican, that sits on the Financial Services Committee, and talk to them and or their staffers as to the benefits of what you're doing. So that when those regulators then come before us and we have the opportunity to ask them questions, you'll see that we're asking the same sorts of questions, and that then gives them the first message that they gotta reform and do something different. Also, there's certain information, as I indicated, that I've done to other regulators. I, as a member, and other members, we can sign either singularly or collectively letters to them saying we want you to look at these issues, and or we end up saying to regulators, we need this study done, and come back and tell us what it is. So I think there's multiple ways in that regards, but it is because you are the new guys and ladies on the block. It stands, with that kind of outreach, so that folks got to really know who you are, what you're doing, and what the benefits thereof, but also accurately understanding so that we can understand what risks, because there's always risk in every business, what they are, so that we can develop that level of trust. But I think that's the way we, at least on a political level here in Washington, D.C., that we're able to push regulators to move and to do things in the right way.
One more. I think a couple of things, a lot of things you said were very interesting. One thing in particular about minority-owned banks and fintech getting together is somewhat brilliant, and I hope people are listening. If you take a bank that's not in your district, but if we take One United Bank, for example, and see the problems with that, though, if they were to partner with a fintech organization, they now have to worry about the regulators in Massachusetts, the regulators in California, plus the FDIC, three of whom don't agree about much of anything. That's just a basic struggle that I think what you suggest is a perfect marriage and would be great for multiple communities and lots of people. It is that initial hurdle that has to be scary, though, to a bank that already just has enough trouble dealing with their primary regulator.
No, you're absolutely right. I mean, what I argue to some, who are supporters of minority banks is that even after Dodd-Frank, and I'm a strong supporter of Dodd-Frank, let me say that, but there were and are unintended consequences, especially to small and medium-sized banks like minority-owned banks. And so therefore we need to fit rules that will help them. And that's another reason why, with reference to fintech, when you see the McKinley and the I-Bill, is so that you don't have those 50 different state regulators trying to get in. Everybody knows what the business is, and I think this is an opportunity when you have those kind of partnerships, and folks from rural America as well as urban America then will also understand what the benefits are, and it's not somebody just trying to manipulate something to their benefit, as some of the big banks may do, but because of what your innovations are, it makes a difference. So I think that opens that dialogue and that language to make those kind of mergers much more exposed, and gives greater allies, because sometimes in these kinds of innovative ways, a lot of it is allies. How many people? It's partnerships. It's to go along with innovation. It's trying to make sure that you have the right mergers or the right partnerships that then brings in more people to the table to say, yes, we need to do this because it's important to me. Let me just on this, because it's important, and I don't know where Phil is, but when you're an elected guy like me, what I got to do is worry every 2 years about how 720,000 people are going to vote. So my job as a member of the House, and every one of us, all 435 of us, whether you're a Democrat or Republican or an independent, every one of us in the House have that same focus and responsibility. And if I can figure out how I can give back to my district and say, these are the things that are helping, and we can show it, then you have an ally. It's the same with each and every member. I think that your message and what you can do, whether it's with small banks, rural banks, minority banks, what that does is then makes it so that we now have an argument not based upon politics. See, because to me, some of this should be out of politics. It should be just common sense to help your folks, in the communities in which you live. So you could take the politics out of it every which way and bring it just into bringing communities up, as I concluded on the American dream and how you're helping to make that happen, because here's where we were stalled because of the old way of doing things, where, I tell my daughter, I shouldn't say my daughter tells me, Dad, that's the way y'all did it back in the 70s or the 60s. Here's what's happening now. So some of us got to understand that the industry has moved and changed, and we cannot continue to do business the way we did it in the 50s and the 60s and the 70s. It is a different time now. And that's hard sometimes, because they say, once you get my age, you can't teach an old dog new tricks. But that's what we've got to do. This technology is fantastic today. It's just unlimited potential. We can't be afraid of it. And generally some are afraid of the new. But we've also got to understand that we've got to have protections in place. You know better than I where those protections need to be. And if you're honest about that coming forward, then we can start changing certain things so that everybody doesn't have those obstacles that you just spoke about. Okay, thank you so very much. I enjoyed being with you.